Good afternoon, everyone, and welcome to our webinar, How AI is Driving Fast Learning Financial Service Providers. I'm Kevin Flanagan, Director of Marketing for Micronotes, and I'll be your moderator. Before we begin, two quick things. Type your questions into the question box on your GoToWebinar toolbar. We'll have plenty of time to answer them at the end. And if you'd like a copy of the slides of today's presentation, send an email to info@micronotes.com. With that out of the way, let's get started. Here's our presenter for today, Devin Kincaid, CEO and founder of Micronotes. Devin?
Thanks very much, Kevin. So today we want to talk about how artificial intelligence is really driving fast learning financial service providers, and a particularly warm welcome to our existing customers who are joining us on today's webinar. We are grateful for your time today, and we're very grateful for your business, as well as our guests today. So thanks for joining. As you've probably figured out by now, the basis of retail competition has really changed from store density and economics to digital prowess. You can see that in Walmart and Amazon, and you can certainly see it in community banking, as it has traditionally been deployed by over-densifying an area with branches, and now branches are not so important. Customers are flocking to digital channels, and that's causing some pretty significant disruptions in banking. Those disruptions are coming in the form of asset movement, and essentially the larger institutions are benefiting, and the community institutions are benefiting. The larger banks are benefiting at the expense of the community institutions, which is obviously an existential risk for folks who are not able to compete in this brave new world. So what is really going on here? So really, it's we're looking at many fewer branch visits, 3 on average visits per year in the United States, and that compares to about 172 visits to the digital channels. That's obviously well north of an order of magnitude difference, and that's problematic if there's no user engagement in those digital channels. And really, ads are not a substitute for what used to happen, where customers would come into the branch and actually talk to their banker about their lives and their needs. And advertising is just not a substitute for that, and as demonstrated by the fact that banner ad clicks are essentially zero. And the problem with that is if there's no clicking, there's no engagement, there's no learning, and there are just no sales that come out of that, because there's no real understanding of what the need is. So, I mean, our hypothesis at Micronotes is that the next decade of retail financial services will be dominated by this idea of learning to outlearn and outservice your competition. And that's a fundamentally different way of thinking about the basis of competition, which has historically been about branch density. So what do I mean by that? Well, what I mean by that is, in order to outlearn, you got to overcome a few obstacles. First thing is you got to get people to actually give you some information. They have to engage with your platforms, and they have to tell you what they like and what they don't like. In order to do that, you got to overcome banner blindness, which is a phenomena where people just literally, you can show them banners and ask them 3 minutes later if they saw them, and they'll say no. It's just a physiological reaction or sensory reaction to just too much stimulus. And there's also just too much email. Spam filters are a problem if you're trying to reach out to your customers. And I don't know about you, but my inbox is very tired of all the spam that's entering it. So if you can, but even then, if you can solve those two problems in those channels, then you actually have to learn from those interactions. And unfortunately, humans can't learn from large data sets the way machines do. So you have to have some form of machine learning going on in the background. Now, the good news is that the banking providers are historically service organizations. They're excellent at servicing customers if they know what need to service. And so once from the interactions that you're getting, you've got to, where appropriate, you've got to push those needs, if they need a human involved, to the humans in the bank who are traditionally, anyway, have been terrific at meeting those, contacting those customers and helping them out. And certainly you should be aware that the larger internet companies are training your customers to expect personalization. So if you think about it, if you're a Netflix watcher, you will invariably be invited to give a thumbs up or a thumbs down after you watch a show. They're not doing that just for fun. They're doing that because they're inviting you essentially to train their recommender engine, which is a machine learning algorithm that's running in the background that is trying to understand what you like and what you don't like. And the same is happening with Pandora Radio. If you listen to Pandora Radio, which I do a lot, the more thumbs up and thumbs down information you give to Pandora Radio, the better your music feed is going to be. And of course, you've all shopped on Amazon, and those little things that show up, customers who bought this also bought this, those are also part of the recommender engine system. So consumers are really being trained to provide this kind of feedback. And so we in the financial services industry are tasked with trying to figure out, how to invite customers to give us that feedback. Unfortunately, thumbs up and thumbs down on an auto loan or a mortgage or something just doesn't seem contextually appropriate. So we've had to devise another way of doing that. We call it the targeted interview, because it looks a lot like what used to happen in the branch. And we don't use ads because ads don't listen. Ads just message. So it's hard to get information out of ads. So what we do is we probabilistically score all the users for all the products and services using the data the bank or credit union provides us. But those are just predictions. We don't know if they're actually if they're correct. So we actually go out and we validate those predictions by asking your customers a question. Hey, are you actually looking to buy and finance a car? Once we have that validated information, that's huge, because that enables us to not only pinpoint the people who are actually in market and either fulfill their loans through electronic means or fulfill their applications through electronic means and eventually loans, or send them to a banker if that's what they prefer to do, to have a conversation about their auto loan needs in this particular example. And then, of course, we also make mistakes, and fortunately, we know that we've made that mistake because the client corrects us. Nope, I'm not in the market for an auto loan right now. And we may ask them one more question. Well, do you have an auto loan with someone else who might consider financing? If they say no, that's okay. That's a mistargeting event, and we will take that information back and we will learn from that information. And this is the architecture that actually learns. So we start with the first party data in the lower left quadrant of this slide. We machine learn the first set of audiences, then we go out and start interviewing the clients, and they actually correct with what we call zero party data, which is not first party data, but directly from your clients. They correct those mistakes. That leads to increasingly better propensity data, and that is ultimately uploaded not only into the Micronotes platform, but can be downloaded as well for use in other channels, for example, email or direct mail marketing. So the whole thing works because you've got a lot of traffic that's built in. There's a ton of traffic in those digital channels, and it's very reliable, like the sunrise. People are familiar with this form of inquiry. They understand. We've been taught since we were in kindergarten what a multiple choice test looks like, and we always think of it as being the easier test. So they know how to do it, and it's easy. So there's no training involved of your clients. So they know just what to do, and most people have taken an online survey anyway. And because we are able to generate such high volumes, about 20% of the entire user population actually takes an interview, we're able to generate a ton of learning data. Yes, we generate leads and sales, and we'll talk about that in a second. But equally importantly, we can learn quickly. And as I said earlier, what we're here to emphasize today is this idea of learning more quickly than your competition is learning about your customers and what your customers need and don't need. Because there is a cost of mistargeting. If you behave like you don't understand your customers month after month after month after month, they may find someone who understands them better. Here are just some examples of some results from 3 different size institutions: $1 billion, $3.5 billion, and $5 billion. These are actually April results. But the thing I'd like you to just take away from these is that our clients run typically anywhere between 10 and 20 campaigns simultaneously. Depending on the size of the institution, they're conducting between 1,000 and 8,000 interviews a month. Sometimes more, sometimes less, but in round numbers, that's what we're talking about. And they're generating between about 50 and about 750 leads a month. And then, of course, because we have the data from the bank, which we're continuously consuming, we can track sales. We don't track all sales because sometimes we actually don't have the data to track 100% of the sales, but we track the ones we have. And the ones we have, you can generate between 10 and, in this example, about 30 sales a month out of the platform. And you can get some sense of what the click-through rates and conversion rates, which vary considerably depending upon what the campaign mix is. So that's an example, and I just wanted to finish this segment by saying that again, you can download these propensity scores if you're a Micronotes customer right off of your console, and that's important because you're going to want to use those scores in your other channels. You're going to want to use them in your email channel and certainly your direct mail channel. By all means, use them because those have real customer information informing them. We also offer attrition and delinquency risk scoring as part of the standard Micronotes package. Attrition risk is, we'll talk about in a second what those campaigns look like, but it's basically surfacing the people who are profitable and at risk of leaving the institution in the next 30 days, and delinquency risk is who's likely to become delinquent in the next 30 days. So let's talk about specific case studies and campaign objectives. So again, what we're talking about here is how is AI actually useful to the bank or the credit union in driving business results? Because AI is really sexy and there's a lot of talk about it, but what is it actually doing in terms of generating real results? So one thing that sort of everybody's talking about today is getting deposits, getting low-cost deposits. So here's just an example of a campaign. You use Micronotes to find a high propensity audience. We go out and we interview. In this particular campaign, one of our clients interviewed 10,627 people. They did it through the online banking channel. They generated 1,764 leads, and they inked 83 new money market deposit accounts. Those are great results, but equally importantly, we learned from all 10,627 of those interviews. So the next time we define a deposits audience, we'll be smarter, and we will be more on target in terms of who to talk to about deposit products than we were the last time. And again, that's out learning and learning faster than your competition. In this example, a lot of people today are looking for fee income. So here's an example in the mobile channel of an overdraft privilege audience. Conducted 751 interviews for this particular campaign in mobile banking, generated 103 leads and 59 new users of overdraft privilege. And again, we learned from those 751 interviews, and that went into the next set of audiences that we'll build for overdraft privilege. But terrific results here, and I would just say, in addition, that one of the reasons why the number of sales conversions was so high here is because the consumer experience was just very quick. I think the whole interview was over in about 4 seconds, and then basically the user just said yes or no, and they were automatically signed up, which is great. Same thing, except in the online channel. Essentially the same campaign, just running in the online versus the mobile channel. 104 interviews, 33 leads, 25 new users of overdraft privilege. Again, fee income directed and continuously learning from interviewing those users. Interest income, define a credit card audience, 1,759 interviews in mobile banking, 324 leads, 20 new credit cards issued. Learn from those 1,759 interviews, so the next credit card audience is better than the last one. Campaign objective, cut loan losses. This was through the online channel. Identify people at high risk of delinquency. Go out and interview those customers, fairly small group of people. We conducted 62 interviews in online banking. We got 25 leads out of that, which means 25 people wanted to take the next step. They either wanted to talk to a banker or they wanted to go and learn more online about skip-a-pay options, as well as the possibility of talking to a banker about their loan. And again, learning from those 62 interviews. And last one was just reducing attrition risk of profitable customers. Obviously, if you have profitable customers, you don't want to lose them. You want to deepen relationships with them. So in this case, we identified profitable customers at risk of attrition in 30 days. We flagged 88 names. Those went into the CRM system. And it's quite accurate. About 37.5% of those flagged customers actually left the bank in 30 days. If you can get your bankers to jump on the phone, you may be able to claw back some of those customers, and you still have the remainder who are in the retention queue. So this is important stuff. The background loss of profitable customers in general is about 0.5%. With this particular client of Micronotes. So these names, these 88 customers were obviously, if 37.5% of them left in 30 days, were actually well modeled to be at risk of leaving against a 0.5% background. So I'm gonna sort of wrap up now and just say that we are growing very rapidly. We've actually more than doubled the number of institutions we're serving since the last quarter in 2017, and we're making big investments in the team and the technology, mainly so we can deliver consistently better results to help our customers outlearn and outservice the competition, and at the same time do it at a price that is affordable. So to give you all a sense of sort of what our price targets are, we're trying to deliver all of the functionality that we just discussed if you're a billion-dollar institution and you've got 5,000, active online users, you're talking about the full enterprise product for a little under $1,000 a month after a one-time installation charge of $10,000. And the $5 billion institutions are running about $2,000 a month, and the $10 billion institutions around $3,000. So very, we're trying to keep the costs very low so the people, so it's affordable and it has a terrific ROI for our customers, which of course is the name of the game. And then of course the key question most customers are asking is, well, how long does it take to get this thing up and running? And the answer to that question is, well, it depends, like the answers to most complex questions. If you are on certain integrated, certain platforms to which we are integrated, we can have you actually up and running and interviewing customers in less than a week. And we've done 2 or 3 of those in the last couple of weeks, in fact. And the way we're able to do that is essentially as soon as the online and mobile banking systems are making calls to Micronotes, we've got some technology that automatically builds the database of your users even before we receive your full-on data matrix, which may take several weeks to negotiate. But in the meantime, you can be live, and if you're on one of those platforms, you can be live and running in a couple of days. So you won't be necessarily doing product interviews, but you'll be doing Net Promoter Score interviews. You'll be doing educational interviews, and you'll be doing life events interviews, all of which are hugely valuable. They also train your clients to interact with this new way of engaging with the bank. So I will end at that point and answer any questions that you may have, and we're about 5 minutes. We have about 5 minutes to go.
All right, thank you, Devin. As Devin said, it is time for questions, so please submit yours in the question box in the toolbar. We do have one that's come in, Devin. When Micronotes does machine learning, does it use my bank's data, or does it use data you have from every client?
That's a terrific question. So the answer to that question is it uses your data only. We do not aggregate data from multiple clients and machine learn on that data, because your clients are your clients. They're unique, and their responses are their responses. So we can't take a response from some bank and try to learn it against your data set, because that's not, unless it's the same person, I suppose. But the short answer to the question is we are only learning on your data and from your clients.
Next question asks about security, specifically, is the Micronotes platform secure?
Yeah, so the Micronotes platform is very secure. The platform itself actually lives on the Microsoft Azure cloud, and the platform itself is SOC 1, SOC 2, SSA 18 compliant, and has been for about 5 years. In addition to that, we are also integrated with some of the major fintech providers in the space, and have gone through and passed all of their security requirements as well. So the platform is absolutely bank secure.
Here's a good one asking about if we can give an example of how we use delinquency risk data.
Yeah, so we touched on that a little bit, but essentially in the campaign, those campaigns are typically trying to get customers who are at risk of attrition to do one of two things or both: to either get them to engage in skip a pay because they actually have they have an episodic financial problem that is of defined duration. It's this month. I had a medical bill to pay. I need a little time, but I'll be back on target. So offering skip a pay in that case is great. The other thing we try to do is also offer them the ability to schedule an appointment in in a branch with a banker, because if the problem is deeper than just a 1 month problem for that particular consumer or customer, then we want them to sit down with a banker. They just lost their job. We want to get out ahead of that and try to make sure that the bank is aware that customer wants to come in and talk to them. But we can flag those customers, and again, as we saw from the results, there aren't that many of them that really are that we consider to be at high risk. But we can pinpoint those people. We want to pinpoint those people because we want to try to help them, and we also want to try to help our financial institutions get out ahead of this problem instead of just sort of waiting for it to become delinquent and then ultimately it's a loan loss. So.
Okay. Well, I don't see any more questions, so I'd like to thank everyone for joining us today. If you'd like a copy of the slides, or if you have any additional questions for us that you may think of later, you can drop us an email at info@micronotes.com. And of course, to learn more about our company and our products, please visit us online at www.micronotes.com. Have a good rest of the day, and thank you again for your time. Bye-bye.
Thank you.